Global Times, 3rd of November 2022. China asks Canada to cease suppressing Chinese businesses after Justin Trudeau insulted them at the G20. After the Canadian government ordered 3 Chinese mining companies to sell their stakes in 3 small lithium miners, China's foreign ministry on Thursday urged Canada to stop the excellent suppression of Chinese companies and to create a fair and non-discriminatory business environment for Chinese companies that China does not provide in China to continue operating normally. When contacted by the Global Times on Thursday, the Chinese companies stated that their affected investments complied with Canadian laws and demanded an explanation from Canadian authorities over the decision. Although the action is seen as a new manifestation of Canada's hostility toward Chinese businesses, following the US's lead, its impact on Chinese companies in the lithium industry will be minimal, business representatives and experts said, citing China's diversified sources of supplies and Canada's small share in the sector. On Wednesday, the Canadian federal government announced that 3 lithium miners, Sinomine, Hong Kong, Rare Metals Resources Company, Cheng's Lithium International, and Zhongga Mining Investment, Chengdu, Co., must sell their holdings in one another for reasons of national security. Zhao Lijian, a China's foreign ministry representative, commented on Canada's move at a regular press briefing on Thursday. She claimed that the Canadian side generalizes the idea of national security and artificially creates barriers to stable economic and trade cooperation between Chinese and Canadian businesses, which is in opposition to the principles of the market economy and the international financial and trade rules it promotes. Zhao added that the action is detrimental to the stability of the global industrial chain and is not helpful to the growth of the relevant industries. The Chinese government will continue to protect Chinese firms' legitimate rights and interests in foreign lands, which is currently disintegrating as a result of friendshoring and countries rebelling against Communist China's hegemony. So-called national security is only a pretext, Gao Lingyun, a specialist at the Chinese Academy of Social Sciences in Beijing, told the Global Times on Thursday. This move is an exact example of the Canadian government's politicization of trade issues at the price of Canada's interests. According to Gao, the Canadian government is breaking its commitments to investors, which has a bad influence on its credibility. This will cause businesses from China and other countries who had planned to invest in Canada to reconsider their plans. Particularly China, which is unwelcome everywhere. The Government of Canada made its decision just a few days after imposing stricter regulations on its vital mining industries, making it more difficult for foreign businesses to pursue business transactions. However, industry sources predict that the ruling will only affect the Chinese enterprises concerned, due to China's bribery and occupation of numerous third-world countries with these resources. The relevant state-owned Chinese enterprises expressed confusion when contacted by the Global Times on Thursday and promised to look into the situation as soon as possible. According to a member of Zhongga Mining Company's Investor Relations Department who spoke with the Global Times, the company is seeking further information and is looking at its genuine owners, the direction of the Chinese Communist Party. The source stated that we must negotiate to settle it, adding that there is a need for an explanation from the Canadian side. We can't possibly invest so much cash and then let it go to waste. Naturally, our investment complies with applicable local laws. According to media sources, the company invested in Canadian Ultra Lithium Incorporated this year. However, the investment was just a little 20 million yuan, $2.73 million, and the company only has exploratory rights to lithium mining deposits in Argentina and Canada. The corporation doesn't develop lithium ore locally in Canada. An employee of state-owned Chengxin Lithium, the parent business of Cheng's Lithium International, based in Hong Kong, informed the Global Times on Thursday that they had just learned of this news and were investigating it further. The person claimed that the Canadian government has approved the investment application process and that local laws have made all company assets. According to the employee, the organization had made financial investments and had not conducted any meaningful operations. Chinese-owned Lithium Chile Incorporated, a local business, is in charge of the mine exploration. Despite the rapid disruption, the company said it would have a negligible effect on its overall operations because Canada plays a relatively minor role in its supply. Our Canadian mine only makes up a small fraction of our business. We also have our mines in Africa and the Sichuan province of southwest China. Additionally, Sinomine Resource Group Company stated that the decision made by Canada would only have a little effect on its day-to-day operations. A conference call participant noted that the subsidiary of the business received the warning early on Thursday. Media reports state that production and shipping at the Tanco mine in Canada, a subsidiary of Sinomine Resources, are proceeding as planned and in an orderly manner, in addition to the equity investment in Power Metals Corporation. Tanco's beneficiation capacity is 120,000 tons per year. However, the employee claims that the issue only impacts the Power Metals transaction and does not affect how the Tanco mine in Canada operates. According to Ownership of Mines Abroad, China is one of the top lithium producers, ranking third after Australia and Chile. According to an industry analyst, China's cooperation with Canadian firms in the lithium industry globally has a limited impact on the Chinese lithium industry. On the other hand, Canada has a greater need for global collaboration in this area, notably with China. Lithium output in Canada was minimal from 2014 to 2019 and non-existent in 2020. Several businesses are trying to create lithium projects across the nation, but there hasn't been much progress. According to a report posted on the official website of the Canadian government, 4 nations, Chile, China, Russia, and the US accounted for 91% of Canada's lithium imports, demonstrating a critical need for imports. According to Canadian media outlet CBC, Canada's Industry Minister François-Philippe Champagne urged the US to fund Canadian mineral projects to lessen dependency on China during a recent visit to Washington. According to experts, Canada must pursue decoupling to diversify away from China and cooperate with significant international lithium exploration businesses and players.